You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN E-mini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things E-mini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borth. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Wednesday, 19th day of April, 2023. Thanks so much for joining us, whoever you are, wherever you are. We're just glad to have you right here, right now. We do 2 live trading broadcasts every trading day. First live broadcast, that's our live training room. That's where our members learn our strategy, our methodology, how to read the indicators, how to read the chart. And it's where free trial members get a chance to see what we're really all about, who we are, what we do, how we do it, even why we do it. Now, if you've never taken a free trial, go to mytradingiq.com. At the top of the page, there's a button that says free trial. All you have to do is click that, and the journey will begin. Now, no matter what day of the week or what hour of the day that you sign up for the trial, you're going to get 5 consecutive days, trading days in the trial, 5 consecutive trading days in the live training room. That's 2 hours every trading day, from 9:30 a.m. to 11:30 a.m. Eastern. Once the live training room closes, we take a 30-minute break, and then we come back for the afternoon broadcast, which is different in format from the morning broadcast. This afternoon broadcast is open to the public. Everybody, everywhere on planet Earth with an internet-connected device. Now, there are 2 different ways you can join this afternoon broadcast. The best way is to just go to mytradingiq.com, scroll down to where it says afternoon broadcast, click the link, complete the 30-second registration form, and you're done. You only have to do that once. Going forward, every trading day, you'll get an email about an hour before the broadcast starts. So at 12 noon Eastern, all you have to do is click the link in that email, and it will automatically log you into our platform. And by doing it that way, you have access to the question box, so you can ask questions and participate in the discussion. Of course, there'll be days you're out of the office, away from the desktop, but you still want to join the afternoon broadcast live. Simply point your browser to our YouTube channel, which is easy to remember, youtube.com/CFRN. youtube.com/CFRN. Not only do we broadcast live every trading day on our YouTube channel, but we also archive every daily broadcast. Currently, there are over 2,200 daily episodes archived for your educational and viewing pleasure. And for those who are new to the world of CFRN, it's a great way to get to know who we really are. Because anybody can say anything today. And the results that we show you today, well, maybe they had a lucky day. Okay? This is why I want you to take this journey. If you really want to become someone who trades for a living, you got to be willing to do the work. Part of the work is researching who's going to teach you, who's going to be your mentor, what trading community are you going to become a part of. Okay? So on YouTube, you can scroll back 6 weeks, 6 months, a year, 2 years, even more. And of course, I don't expect you to listen to every daily broadcast, but I want you to pick some days at random. Okay? And then fast forward up to the part where you see me and Michael doing the recap. He does the recap of the live training room. I do the recap, the big picture look at the markets, and we go over the concierge trade alerts, the Logic 247 alerts. It will help you understand the entire package. This isn't your typical trading chat room where you buy a set of indicators and you get a PDF and a virtual pat on the back and best wishes. When you become a CFRN passport holder, that's lifetime membership. No recurring fees, no upsells, no nonsense. So at the end of the trial, you're able to make a well-informed, intelligent decision. Number one, if you have what it takes to become a trader. And number two, if what we do is right for you. But we foot the bill for you to find all that out. Our time, our money, our energy, our resources, we invest them in you for 5 consecutive trading days. And while you're on the trial, you have access to everything a lifetime member has access to. One-on-one mentoring sessions, the Logic 247 alerts, the concierge trade alerts, platforms, the indicators, and of course the live training room, 2 hours every trading day. And it's an interactive environment where you're encouraged to ask questions as you trade along in your demo account, as you learn the strategy and how to read the indicators. Now, if you scroll back far enough, the format was different. Michael would come on first and do the recap of the live training room, but we've switched things up here over the last couple months. I take the first 45 minutes to do the recap of the stuff I do the recap of. And then 45 minutes in, Michael shows up, does a 15-minute recap of what happened this morning in the live training room. And then at 1 p.m. Eastern, or 1 hour into the broadcast, we go live on the TradingView platform and do some live trading for about 30 minutes. The last couple of days have been pretty flat. I don't think we had a single trade set up yesterday in the TradingView live stream, but that in and of itself is a great lesson. Okay? If you don't have the patience and self-discipline to wait for a valid trade setup that meets all the criteria, not 70% or 80%, but 100%. Okay? If you can't sit still long enough to wait for whatever markets you're trying to trade to give you a valid trade setup as defined by the rules taught to you in the live training room, I dare say you don't have what it takes to become a trader. I don't want to dash your hopes, but I also don't want to waste your time. Fair enough? Okay. Now, every day we open with a word of prayer, and we're going to do that today. The discussion we've been having is being brave enough to believe. It's easy to doubt, but it takes courage to truly believe. Now, the scripture I'm going to share with you today may seem a little out of context with the discussion that we've been having, but listen up. Revelation 22 from the Message translation. And this is a little longer than normal, so relax. Then the angel showed me water of life river, crystal bright. It flowed from the throne of God and the Lamb right down the middle of the street. The tree of life was planted on each side of the river, producing 12 kinds of fruit, a ripe fruit for each month. The leaves of the tree are for healing the nations. Never again will anything be cursed. The throne of God and of the Lamb is at the center. His servants will offer God service, worshiping. They'll look on his face, their foreheads mirroring God. Never again will there be any night. No one will need lamplight or sunlight. The shining of God, the Master, is all the light anyone needs, and they will rule with him age after age after age. Now, I just shared with you Revelation 22, verses 1 through 5. But write this down. I really want you to read the rest of Revelation 22 on your own time. That would be verses 6 through 21. Okay? Because we only have a limited amount of time here, so that's why I'm stopping there, but I really want you to read the entire chapter, Revelation 22. It is not enough just to know that heaven exists or even to know where it is. We must know the way to get there. Thomas's second question in John 14:5, yes, that's doubting Thomas, much more than intellectual pursuit, signified a desperate plea by a devoted follower. How can we know the way? His simple question provided all the invitation Jesus needed. Jesus didn't give a list of things to do to enter heaven. Love your spouse, give 10% of your income, be kind. Although these do reflect a life committed to faith, they are not a punch ticket into heaven. Jesus simply says in John 14:6, I am the way and the truth and the life. No one comes to the Father except through me. God was unwilling to leave us in a helpless, hopeless condition. Through Jesus, everything that is now broken will one day be made whole. We have the certain promise of heaven in this uncertain place called earth. In a world that is deeply fractured by sin and heartache, we have the hope of eternal life. With no other way to provide salvation for us, Jesus became the way. He is the way when we feel crushed by the injustice of a situation. He is the way when we feel overwhelmed by our circumstances. He is the way when we feel bruised by doubt and battered by disappointment. He is the way when we don't have the strength to try again. He is the way to life. We don't have to traverse the agonizing curves of life alone. When we are brave enough to believe in Jesus Christ, We aren't handed a paper map or even the most sophisticated navigational system to get through life. We are given the love of our Heavenly Father, the infallible Word of God, the power of the Holy Spirit, and the promise that heaven will one day be our home. Question: how does the promise of heaven reassure your heart that death is not the end, but the beginning of eternity with Jesus? As a believer, you need to be able to answer that question. Join me in a word of prayer. Jesus, thank you that you became the way for us to live an abundant life here on earth and spend eternity with you in heaven. Help us to fix our eyes on our eternal hope, which is you. It's in your name that we believe and pray. And everybody said, amen. Now, those of you that are tuned in via the YouTube channel, you already know the title of today's broadcast, The Hunt for the Holy Grail. We've talked about it a lot over the years. Remember, we've been around since 2005. But we're gonna dig a little deep into that topic here in just a few minutes, as soon as I give you the numbers from around the world to put things in global perspective. Okay. Starting in the U.S. with the cash markets, or the indices as they're called, the Dow is down 89 points. The NASDAQ is basically unchanged. The S&P 500 is down 4.5. And the Russell 2000, our man in the street, down 9 points. This is some quiet, sideways trade. Yesterday, I talked about the market coiling, about it waiting for some major catalyst, some event, whatever the case may be. And I think we're going to see a huge move. Now, my thoughts have been a huge move to the downside. And when we go to the daily chart here in a few minutes, I'll show you why that's still in place, at least for today. Remember, we don't know what's going to happen next in the market. No one does. Not man nor machine, nor algorithm. There's a lot of false promises out there, written by very expensive copywriters. The emails you get, the websites you visit, they make you a lot of promises. But chances are you've learned that those were empty promises with no meat on the bone. In the commodity basket, crude oil down $1.97, trading 78.92 last. That's a drop of 2.5%. Gold down $16, trading 2003 last. Silver up 4 cents, trading 25.30 last. In the Asian markets at the close, the Nikkei posted a loss of 52 points. The Shanghai dropped 23. The Hang Seng fell 282 points, which is a little over or almost 1.5%. And in the European markets at the close, FTSE down 10, DAX up 12, CAC up 15. These are some of the quietest markets we've seen in a very long time, and that's from a global perspective. It was a red day in Asia. It was a mixed day for the UK, but still very low volatility, and it is definitely a red radio Wednesday here in the US of A. Thanks, Stub. Or Ken. I don't know why. Anyway, let's not get caught up in that. But thank you, Ken. Okay. Let's go to our topic. The hunt for the Holy Grail. Trading can be a highly rewarding and lucrative activity, but it requires a significant amount of skill, discipline, and knowledge to succeed. Unfortunately, many new traders enter the market with unrealistic expectations, hoping to find a magical solution that will guarantee their success. They often refer to this as the Holy Grail of trading, the one strategy or the one technique that will lead to consistent profits without any effort or risk or ever knowing the agony of being stopped out. But the truth is that such a thing does not exist in the world of trading. And there are several logical reasons why. First and foremost, financial markets are highly complex and dynamic, driven by a wide range of economic, political, and social factors that are constantly changing. This means that no single strategy or technique can work consistently in all market conditions. Now, we understand this, and so that's why we built a strategy and a methodology that actually can work in any market condition, except the sideways market. Nobody wants to trade there. But you'll never hear us promise that you'll never be stopped out again or that you're guaranteed success. What we've discovered is that price flows are the same across all markets and all time frames. So the worst thing we can do is to change our swing every time we step up to the bat. And unfortunately, that's what a lot of traders do. Now, a technique that is effective for trading stocks may not work for Forex or commodities. Therefore, traders must adapt their strategies to the current market conditions and constantly evolve their approach as the market evolves. Our strategy and our indicators can be used across any market and any time frame because price flows are the same, but you'll never hear us refer to it as the Holy Grail because the Holy Grail cannot exist. It would defy the laws of science, physics, and even God. Secondly, the financial markets are highly competitive, with millions of traders around the world all vying for the same opportunities. This means that any strategy or technique that is widely known and used will quickly lose its effectiveness as more and more traders adopt it. Now, we knew that when we built our strategy, so that's why we always enter a trade by buying or selling on a stop. You see, the more people who buy at a specific price or sell at a specific price, the greater the probability that your trade is going to reach its intended target. And everyone who learns our methodology and learns our strategy, if they're executing on the time frames that we're executing on, that means we're all entering at the same price. So unlike many methodologies and strategies that would be destroyed by too many people knowing the quote-unquote secret, The more people that understand our methodology and strategy, the greater the probability of you actually finding success. Third, trading involves a significant amount of risk. There is no way to completely eliminate it. No matter how effective a trading strategy may seem, there is always the potential for unexpected events or market movements that can lead to significant losses. This is why our strategy only works when used with aggressive risk management, which we teach every day in the live training room. Traders must always be prepared for the worst case scenario and have a solid risk management plan in place. That's why all of our new traders, one of the first things they do as they're learning the strategy is write a business plan and a trading plan. Two very different things, yet 9 out of 10 new traders don't even know they need such a thing or even what it is. Finally, trading requires a significant amount of skill and experience to be successful. That's why we never promise overnight riches. Okay? That's just nonsense. This is not something that can be learned overnight or through a single strategy or technique. Those of you who've been around know that we blend a number of things. Okay? From the BBC, CFMA1, to actual market structure, along with the weekly trading zones. It's a complete package. You simply will never find any one indicator or oscillator that will guarantee you success in the markets. Can't happen, won't happen. Please don't waste your time. It takes time, practice, and patience to develop the necessary skills and knowledge to navigate the markets effectively. Therefore, traders must be willing to invest in their education and training and be prepared to learn from their mistakes. While the idea of a holy grail of trading is obviously appealing, I mean, we'd all love that, right? The reality is that no such thing exists in the world of trading. The financial markets are highly complex, dynamic, and competitive. There's no single strategy or technique that can guarantee success. Instead, traders must be adaptable, innovative, and constantly evolving in their approach to the markets. We call that the learning curve. The more familiar you get with how to read a chart, how to read the indicators, how price behaves around the weekly trading zones, the sooner you can actually call yourself a trader. And finally, you must be prepared for the risks involved and be willing to invest in your education and training to develop the necessary skills and knowledge to succeed in the long run. Now, we're not foolish enough to think that we have the only strategy that works. But what we do have is a strategy that provides you with a definable edge. And once you learn that definable edge, you can trade any market in any time frame. We're not teaching you how to trade a specific instrument. We're teaching you how to trade. Once you understand how to trade, You can trade the S&P Emini, the Russell, the Dow, the NQ, crude, gold, silver, Amazon, Walmart, Bitcoin, the British pound. Again, if you've not taken the free trial, go to mytradingiq.com and click the button at the top of the page. The only way this is going to make sense to you is if you truly see it in action and actively participate in your free trial. Now, what does that mean, actively participate? It means you download the platform, or if you have TradingView, you send us your ID on TradingView so that we can turn the indicators set on for you. During the trial, you'll have access to everything our lifetime members have access to, except the members only Thursday night workshop. If we let you in there, we'd have to change the name, and that's been the name since 2008, so we're going to keep it that way. However, at the end of your trial, again, you should be able to make, you should understand by the end of your trial that there is no holy grail, but there is a way to build a successful trading business using a few simple indicators, market structure, and learning some basic rules that we teach each and every trader, whether it's in the live training room or during their unlimited one-on-one private mentoring sessions, through the alerts, both logic and CTAs. At the end of your trial, if you've actively participated, you can make a decision that you can trust. All right. Let's do the thing. What thing? This thing. Logic 247 is our 24/7 around-the-clock E-mini alert service. It's been 246 weeks since we rolled out. That was after the beta test. It's now been 246 weeks. We've issued over 13,800 individual handcrafted alerts. Since the markets opened Sunday night at 6 p.m. Eastern, this week we've issued a total of 41 alerts so far. 6 never triggered. As of 7 a.m., when this recap was done this morning by Valerie, we were still waiting on the outcome of 6. Now she will update the recap this afternoon, and she'll update it again this evening. If you're on the trial, you'll find that in the trial channel, in the trial discussion group. Okay? And I can't encourage you enough, when you take the trial, you got to get connected to Telegram. It's a free messaging client. You download it for free on your phone, on your PC, on your Mac, whatever, at telegram.org. It's fast, it's safe, it's secure. And it's how we communicate with one another outside of the live training room and this afternoon broadcast. So far this week, we've had 29 actionable alerts, of which 4 or 14% would have been stopped out based on not risking more than $300 per contract per trade, less when possible, based on market structure and a simple 3-step process that we teach all of our passport holders during their unlimited one-on-one mentoring sessions. Over the last 246 weeks, we've averaged 20% or less of the alerts being stopped out based on the risk profile I just explained. Now, an alert could have a potential profit of $1,000 a contract, even $2,000 a contract, even more. But if you plan to jump out once you've made $100 per contract, I don't recommend that you risk more than $100 per contract. bad math, bad science. And while it might work out for a few days or even a few weeks, ultimately, it'll come back to eat your lunch. And that's no fun. Now, the logic alerts are based on current price action, but there's time built in for you to get the alert, study the 30-minute chart, see the window of opportunity, and then be prepared to actually trade the alert on your smaller time frame when price reaches the entry. Our original alert service, the concierge trade alerts, they're a little bit different in a couple different ways. Number one, they don't come out around the clock 24/7 as opportunity presents. They're published as a static report every evening shortly after the Globex open. So we know today we're in the Wednesday session, but the Wednesday session began Tuesday night, last night, at 6 p.m. Eastern. Remember, we're talking global markets here. So the Wednesday session began Tuesday night, 6 p.m. Eastern. I published the report at 6:40. What do you do once I publish the report? Now, if you're on the trial, you're going to have access to these numbers just like our members. Using the ES as an example, first thing you do is you make note of where price is at this time. Now, the previous night, I was running a little late. I didn't get them out to 7 p.m. So, whatever time it pops up in your feed, okay, go to your 30-minute chart and make note of where price is at this time. It's always going to be between these two numbers. Once you've done that, if price gets above the 30-minute BBC, that's the green line you'll see on my charts, then it's attempting to reach the long target. If price gets below the 30-minute BBC, it's attempting to reach the short target. It's that simple. You still have to look left to spot potential obstacles, be they previous swing highs, resistance, or previous swing lows, support. And over time, you will learn how price behaves around a weekly trading zone. Only three things can happen at a zone. 70% of the time is consolidation, 20% of the time is rejection, 10% of the time is what we call the slice. Once you learn how to use those weekly zones, they'll become one of the most important tools in your trading toolbox. They're not a holy grail by any stretch, but they do help you stay on the right side of the street. You don't want to be buying when the market's dropping. You don't want to be selling when the market's rallying. Okay? So that 30-minute BBC and the weekly zones and price, where price is relative to the BBC, will help you stay on the right side of the street. I mentioned that in the Logic 247 channel, there's over 13,800 individual handcrafted alerts. Every single one of them is a trend trade. Now, counter trend trading, there's nothing wrong with it. It just does not have the same high probability, low risk characteristics of a trend trade. As you spend a week with us during the trial, or those of you that have been with us for a while, you've seen the benefit of trading with the trend versus trading against the trend. Now, this broadcast is open to the public, so anyone that wants, if you're not a member or trial member, you didn't get these numbers last night at 6:40 p.m. So grab them, take a screenshot. We'll get through as many as we can. Michael will show up here in just a few minutes. And then what we don't get through, once we're done trading live on the TradingView platform, I will complete recapping whatever markets we don't get to. Now, my big question for how many days now? 1, 2, 3, 4, 5, 6. Is this just a major head fake? Okay. Price has gotten, or blue and climbing has gotten directly above price. Now, when you've got the step line and blue and climbing running parallel on any market, any time frame, okay, that's bullish, or in this case, bearish, right? Once the step line crosses blue and climbing, we anticipate a pullback to the BBC. But this market has not given up these fresh highs easily. We've been in a downtrend over a year. The low of the downtrend came in October 13th. The bounce off of that low came in, the high came in on February 2nd. So we've just stagnated across here, coiling, whatever name you want to give it. I anticipate an explosive move out of here. When will it come? I don't know. Will there be some major economic report that does it? Perhaps. Could there be some breaking news on your news channel? Although it's hard to find a news channel anymore. They're just opinion channels, no matter which side of the aisle you're on. Oh, but again, speaking of news or opinion channels, part 2 of Tucker's discussion with Elon last night was excellent. Make sure you watch part 1 and part 2. They discuss artificial intelligence. Elon was the founder, one of the founders of OpenAI. Then he and Larry Page had a falling out. They haven't spoken in a couple of years. And so Elon has some and he's one of the smartest guys on the planet, one of the wealthiest guys on the planet. And he paid more in taxes last year than any other human being on the planet. He's a real interesting guy. Okay. So I still don't have an answer. I thought I did when I saw this red candle, but it's no longer a red candle. It's now rallied back up to resistance. Remember, once blue and climbing gets above price, it becomes potential resistance. So the coiling continues. Michael has joined us. So
I am here. I am here.
And so what we're going to do, guys, we will, after Michael gives us a recap of the live training room, and we trade live on TradingView, or look for trading opportunities on TradingView. Hopefully we'll find some. I will then complete the recap, and we'll walk through each and every one of these markets. So, Michael?
Yes.
Take it away.
I am ready. Okay, here we go. All right, we'll bring it all the way over here to this screen. All right, ready to go. On time today. I'm doing everything.
Yes, right. It looks good.
All right, good. Here we go. Good afternoon, everyone. Today is Wednesday, the 19th day of April, 2023. 19th day of April, 2023. If you have not taken a free trial with us and you want to, go here to mytradingiq.com. Right here it says sign up for your free 5-day training now, 9:30 to 11:30 Eastern time. Click on that. When you do that, fill out the form and then go here to trading platforms. mytradingiq.com, trading platforms. In here, you can download DT Pro. I'm going to show you stuff on DT Pro right now. You should sign up for TradingView, all right? And if you have NinjaTrader, then you just have to give us your NinjaTrader machine ID, and we'll set you up with NinjaTrader as well. You can do 1, 2, or all 3 of these. I would recommend you do at least the TradingView portion, okay? Once you do that, go to the trade rules. These are the rules for the trade entries, the risk management, and the trade exit. All you need to know, the rules you need to follow are right here, all right? Right here, a single page has all the rules, everything you need to follow. Do that, and then you'll get results like this. Okay. If we're going to look at the spreadsheet, you have to read all the CFTC risk disclosures down at the bottom. Today is the 19th day of April, 2023. Today we lost 3 ticks in the NQ. We made 6 in crude, 18 in gold, and 16 on the ES. That put us at plus 425 in the morning session. Today it took 3 minutes and 1 trade to get to the goal for the day. At that point we're up $720, and we took a total of 7 trades this morning. So on the month now, we're at $5,697. That's over 12 trading days, averaging $474 per contract per 2-hour trading day. We've gotten our goal on 73 out of 74 days, and we've now gone 2 days since our last non-green day, and 421 business days since our last red day. So that puts us at $37,850 on the year, and that is averaging $511 on the year. $511 per contract per 2-hour trading day so far. Okay. Now, if you were to quit trading when you get your goal for the day and you were to add 1 contract per month, you now would have only had to work 17.43 hours. That's a real thing. You know, if you quit trading when you get your goal for the day, you don't have to keep trading. You don't have to keep working. And you would have averaged $1,409 per hour if you did that so far. Now, I know in the beginning, it's not a lot of money in the beginning. You know, when you're making $100 a day, $100 a day, $100 a day, then $200 a day, $200 a day, $200 a day, then $300 a day, $300 a day, but then you get up to 400. And, you know, when you have 4 contracts on, the numbers add up a lot faster. Like today, I had 4 contracts on gold in the trade. You know, I didn't have to take it off at 10 ticks. It went 18 ticks. So I took 18 ticks. Or was it 18? Yeah, it was 18. Yesterday it was 12. And today it was 18. With 4 contracts, those extra 8 ticks is $320 extra. And it's all in the same couple of minutes. Okay. So it does add up when you get to more contracts. It adds up pretty quickly. And so that whole thing of quitting when you get your goal for the day really is a real thing. You know, if I had 5 contracts on, you know, it would have been even more. You know, with 5 contracts, with 18 ticks, would have been another $180. We'd have been at $900 in 3 minutes. You know, I could live on $900 a day in 3 minutes, and I have the rest of the day to go do everything else. Anyway, let's get into the actual trades. Okay, we'll start out here with gold, since that was what we were just talking about. And we only had that 1 trade on gold. It was right here, my very first trade of the morning, right here at 9:30. I took 18 ticks profit on that. And then I got into a whole bunch of talking, and I didn't end up taking the next trade, which was a really nice one. I didn't end up taking anything over here, and here, and here, and here. I didn't take any more trades on gold. There were some more nice trades to be taken. There were some stop outs in there too, no doubt. But that was all that we did with gold. You can see in here, after it had a little bit of a trend change right here, it gave an arrow right here. Now, I wouldn't have taken that trade. I'd be looking for the next trade right in here. Okay, I would have taken this, but I wouldn't have taken this. Even this is questionable. See, it's not really committing to one side or the other here. It's going up and down, just enough to trigger a trade in every direction. Right now, that's what gold is doing anyway. The crude oil, though, on the crude oil, we had some pretty good movement today, but we did have crude inventories come out today. Now, it was a huge miss on the crude inventories. The draw was much bigger, like 10 times bigger than what they were thinking. And they say it's good news. I don't know why. It doesn't make sense to me, but that's what they say. All right. So on the crude, we didn't have any trades to begin with right through here. You know, this was all in the pre-market. It was all flat with no trades. The markets opened up, and it did give a trade right here that I missed. It was really nice, and it just kept going down and down and down without any follow-up trades. Finally, it turned around and gave a trade over here. Now, this one, we were able to walk through this one step by step by step. I ended up with plus 6 ticks on this, but you know, the original spot we were looking for was 79.40. Swing high was 79.42, and then I had 79.50 was the next level up. And you were able to see all that stuff as it was coming together in that trade. If you were not there this morning, it was recorded, and you can see the recording of that if you are an active partner. Let's see, it followed up with this trade right here that would have stopped you out. And then you wouldn't have done any more trades in that direction. And then get over here, and after a direction change, you don't want to take the first shallow pullback. So you might have taken this one, would have been a break even, or this one, which probably would have been a break even as well. Change directions again. This was not a shallow pullback, so you would have taken a long trade right there. Then the follow-up trade I would not have done because it didn't put in a higher swing. Change directions again, shallow, don't want to do it. Could have taken a trade right in here, which would have worked out to a break-even trade. And then you get into the break. There was one nice trade here during the break, one nice trade here during the break, and then a stop out right here. That would have been one stop out, the combination, but I probably wouldn't have done it anyway because we didn't put in a lower swing right here. So we would have had a couple of decent trades during the break, but not too much. Not too much. Okay, in the ES. Now there was one trade in here on the ES. I was doing a meeting with one of our partners, and we were doing it on DT Pro. And the trade was from right in here on DT Pro. Now it's pretty similar to this. We would have had to have drawn a trend line on DT Pro, and it would have gotten you in the same place right here on the sub close. It didn't put in a higher swing at that point. It took forever for it to happen. I mean, we went through the whole meeting without it actually getting any higher than this level right here. But it did pull back and give a secondary trade. I wouldn't have done the secondary trade because it didn't do this higher swing right there. But let's go back to the beginning of the day for the gold. I mean, for the ES. Well, there's not really that much to see. This is the whole day right here on the ES. Not all that much to see on it. The trades that we did do, we didn't do anything right here at the beginning. I was looking for this to complete this leg length right here and get up to this level. It took forever for it to do that, but it eventually did. Then I was looking for it to complete this leg length, which again took forever for it to do, but it eventually did. Our trade on the ES was from right in here. The first trade we took, we got 14 ticks on this trade. Right, the next trade that we took right here, we only got 2 more ticks on that one. That put us at plus 16 on the ES. And then we didn't do anything else with the ES. This was during the break. I just described those trades, but that was during the break. Wow. Either I'm going really fast or the clock's going really slow. But either way, we'll get into the NQ now. I don't have my question box up. Let me go over there. I got very quiet. You got very quiet. Okay, you're talking, Ken, you were talking to Dwayne. Clarify the goal for the day on the spreadsheet is kind of separately from the left side of the spreadsheet. I will do that, Dane, in just a second. Okay. It is counted separately. You raise your fine. That'll do it. That'll do it, Ken. All right. So the NQ. Let's go back to the beginning on the NQ. Okay. And I will be happy to show that to you, Dane. And we have plenty of time. It's 9:54, so we have 6 minutes left before I start the next thing. That is plenty of time. All right, so on the NQ, there was this long trade right here that I didn't do, and I did this follow-up trade right here. We got 40 ticks profit on that, 10 points on that. I missed that one, which would have probably stopped me out if I'd have gotten it. And I took this one over here, which I should have gone to break even on, but for some reason my automated strategy to move my stop to break even wasn't working properly today for some reason. And let me see if it is right now. It should have moved my stop. See, it's not moving properly right now. I gotta make sure I got it configured right. I must have screwed something up in the configuration. Oh, I don't even have it selected. That's why it wasn't working right. I guess in the meeting I was in yesterday, I unselected it by accident. Let me see. There, okay, now it's working, right? I see what the problem is. Operator error. Okay, that's totally my fault. I'll have to show everybody that tomorrow in the room. Because I was complaining about it this morning a little bit. Anyway, this one right here, it should have gone to break even automatically after 8 ticks in profit. It didn't. So I bumped. I had to put the stop in myself, and I did, and it came back and it's me out for minus 20 ticks. And that's fine. Then this one right here, I ended up getting a break even on. And over here, I got another break even right in here. And this one, again, it didn't put my stop where it should have. It didn't put it on at all. So I went to put it on myself and I accidentally put it in the wrong place, and I got minus 23 ticks on that one. So that put me at minus 3 overall. So I had a trade that I missed right here and there, and I took that one and had minus 23 on that. Then we get into here, and I missed this trade too. I didn't do any more trading on the NQ, I don't think, for a little while anyway. I missed this trade and that 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 trade. I didn't trade again until all the way over. It doesn't show me trading again at all. I guess I didn't trade again at all, did I? I ended with minus 3 ticks. Okay, so let's just get into what I did miss. Now we have just 3 minutes left in here, but I'll answer your question in just a minute, Dane. In here was nice trade off the ribbon. In here was nice trade off the ribbon also. These two would have been combined. This would have been a break-even trade. I probably wouldn't have done these because this one didn't put in a higher swing. I would have done this, and this would have been part of that for that higher swing. Then I would have done that, probably gotten a break-even and not done these. I would have done this. I would have done that, and I would have done this. Okay, then we get into here, and yeah, I probably would have done that one. Coming off a higher swing, I would have done that, and it looks like it would have stopped me out. I wouldn't have done that. I wouldn't have done that one. I would have waited for this, and that would have worked out. I would have done that. I would have done that. I would have done this. It would have been break even, so I wouldn't have done those two, and I would have done that. That is where the NQ was. We ended with minus 3 ticks on the NQ this one. After being up plus 40, we ended up with minus 3 overall. Why are the ribbons not being used on the longer time frame, the 30 minutes? Well, I'm not using a 30-minute chart right here. If you're talking about Dwayne, he uses the same stuff. The stuff that's within the ribbon is the BBC. He uses the BBC. That's the leading line in the ribbon. He uses the MA1. He's always used that. All right. Every now and then he'll have the ribbon on there, but he doesn't always use the ribbon in there.
You can always use the ribbon on any time frame, 30-minute, daily, weekly, monthly, doesn't matter. I've just chosen to support the old timers who've been with us for a long time and have gotten accustomed to our previous incarnation of the indicators, which are the same, they just look different. And Michael will explain all that.
Yes, the ribbon is actually the leading line. The BBC is actually the leading line in the ribbon. The ribbon is built off of the BBC, and the BBC is the stuff that you're talking about. Hold on. Dane, to answer your question, the goal for the day is to get $100 in profit. Okay, so over here it's to get $100 in profit. Now the numbers that I have in here are with 4 contracts. Okay, the number over here is with 1 contract. Okay, all of these numbers here are 1 contract. Okay, and this number right here is 4 contracts. All right, that's for this month. Last month, this number was with 3 contracts, and the month before it was with 2 contracts, and the month before it was with 1 contract. Okay, so that's probably what, I think that's what you're asking, right? Okay, I want to make sure I covered that for you. So this number over here, this is not a per contract number. It says up at the top, I think it says actual goal $100 per contract is reached with multiple contracts traded. I clarified that text up there. Okay, so this is the actual number, the dollar value, the actual value of closed trades when the $100 per contract number is reached. Okay, so on a lot of these days, if I hit just the exact $100 per contract, then it's going to be 400. But I haven't done that any day yet this month. And because most of the times it's a mixture of things. It's not just one thing that turns it into that. Okay, guys, I got to jump into the other thing right now, the live stream. So let me jump over there and hit refresh on that. If you've not taken a free trial with us and you want to take a free trial, go here to mytradingiq.com and sign up for the free trial over there. Okay, right here, mytradingiq.com. Sign up for it right here. Okay. Now in this stream, let's just jump onto this. All right, and we'll go over here. Now, hit start stream on that. And we'll start trading again here in just a moment. Right now, the stream is live. Okay, so now what we're looking at right here, the crude oil just started to move up again. The long-term direction is bullish right here. The ribbon right here, Williamson. The ribbon right here is spread out and moving up. The BBC is the leading line of the ribbon. Now that is the same thing, whether it's on a 30-minute. And here the BBC is the leading line down. Whether it's on a 30-minute, a 7 range, a 10 range, a 50 range, it's the same thing. Okay, so the crude oil just started this big move up right here, and now we needed to pull back and give us an opportunity to go long. Hopefully we'll get some trades in here today. The last couple of days in the live stream from TradingView, the last couple of days the markets have been pretty dry and we haven't had any opportunity to take trades, but there were good training opportunities. So for anybody that's in the live stream right now, I just want to suggest if you have anything you want to look at, just type in the symbol. Okay. Do I have any videos that explain the ribbon trades? Yes. You're only used to the BBC and the MA one. There are a ton of videos that explain the ribbon trades. We've been using them for a long time. Now, the ribbon trades, are you talking about the ribbon trades on TradingView or on other platforms? Because I'm guessing you're still on other platforms and not on TradingView right now. The long-term DT Pro. Okay. Well, yes, there's a bunch of videos. If you go out to mytradingiq.com, you'll see there's a tab for videos. Okay, you can go there and watch them there. There's a bunch of stuff out there for you to look at. Okay, so for this is TradingView. These are TradingView charts. These are TradingView charts, and the ribbon is in the middle of all this right here. Okay, this shows you the long-term and the short-term direction and the ribbon with the trend within the ribbon, the long-term trend on the outer bands. The slingshot is also more precise, and it does not have the S3 line. Now, in the training room this morning, I took off the UC line or the green line within the slingshot to illustrate that the black line is what is used to facilitate the entry technique. The green line can be used to facilitate the exit. Okay. If you go to mytradingiq.com and you look at trade rules right here, it's clearly defined. The entry, the risk management, and the exit. Okay. So with the slingshot and without the slingshot entry rules, and this right here is where that green line comes into play. Okay. For the exit. Okay, it doesn't come into play anywhere else but there. All right. Close that and just go back here. All right. So what we need is a pullback here on gold. We have our long-term direction is bullish. Long-term direction is bullish on crude oil. Long-term direction is bullish on the ES. So we need pullbacks on any one of those to get a trade opportunity. We don't have it yet. Okay, but that's what we're looking for. Didn't know I built that edge in. Okay, so the long-term direction, again, these outer bands, if they are spread out and going up, it's bullish. Spread out going up, it's bullish. If they are spread out and going down like this, it's bearish. That's your long-term direction. When it changes like this in here, it gets flat and you don't have any direction, so you don't have any trades. Right? Now you can set in here if you want to your no trade zone. You can turn that on and it'll show where you do not want to trade. Now you won't get any trade indications in here anyway. You won't get any arrows anyway in there. All right, But when it flattens out like this, those are places you do not want to trade. Right. Again, for anybody who's in here who is new, that no trade zone is something that you can set. You can turn it on, you can turn it off, you can expand it if you want to. That is in here. If you go to inputs, the sensitivity setting down here at the bottom. Oops, all the way down at the bottom. For crude oil, it's set to 0.01, but if I set it to 0.35 for crude oil, you'll see the no trade zone expands dramatically. And you see all the arrows going away as well. That's because it is telling you that the long-term direction does not favor trading when you put it like that. Okay. So we're still looking for an opportunity to trade here. The closest thing we have is over here on gold right now. The black line down here in the slingshot is oversold. Long-term direction is bullish. Everything's looking bullish. So we have a chance here to have a long trade. Now this isn't your ideal trade because it's still right after the direction change right here. And I like to have a deeper pullback right after the direction change. Okay. But we'll see what happens. Let's see if it gives us a shot. Hello, Casey. Casey, if you want to see anything else, we're just doing futures right here. But if you want to see anything else, ETFs, Forex, cryptos, anything like that, just type in a symbol and we'll take a look at that stuff. Okay. I don't know if futures is what you trade normally. I don't know if futures are what you trade normally, but that is what we got going in here. Okay. This one over here is gold. This is crude oil. This is mini S&P, and this is NASDAQ. Okay. I'm going to connect on this again, and hopefully it's not going to kick me out. All right. So we're waiting for an opportunity to trade. We just don't have one yet. Gold is the closest thing to giving us one right now. We need pullbacks on all these other ones to get this black line down here. There are two things that would trigger a trade. Two potential things that might trigger a trade. One is a pullback down into the ribbon, and two is the black line getting into the oversold. Okay, you can see we don't have either of those right now, but those are the two things that might trigger a trade in here. Okay, do we look at stocks? We sure do. Just give me a symbol and we'll go look at it. Yeah, if you haven't followed us yet, just hit the follow button too, and you'll be notified every time we go live. We try to go live every day at 1 p.m. Eastern time. But if you want to look at a stock, then just give me the symbol and I'll be happy to put it up. Okay. Right here, it's pulling back. This is the deeper pullback that I wanted to get on gold. Okay. GC. Well, this is gold right here. This is gold over here. Or is that a stock somebody wanted to look at? My thoughts right now are on gold. If this pulls up out of the oversold, I'm going to go long. All right, right now on gold, we got a low on this bar, 2007.5, so I'm going to buy 8 ticks above that. Right now, oops, I just made that go away, 2007.5, so I'm going to buy 8 ticks above that, which would be right here at 2008.3. Okay. And if that continues to move down, then I'll move my order down. But these are all 7-tick range bars, so that means every bar is 7 ticks high. So I know ahead of time where the bar is going to close, so I can be proactive with my order like this, right? Because I know if the bar has a bottom right here at 0.5, the highest it can be is 0.2. So if it's going to close at the top and trigger a trade for me, then I'm ready at 0.3, because that will be a long trade, right? So I'm proactive with my order right there. Okay, we are not trending over here on the NQ. Okay, so GC, you meant the gold futures, right? That's what you were talking about, right? Because that's what I got up right there. So we can look at that. We can wait and see if it turns into a trade. Now, if we look at, if you go here to the trade rules, right? These are the rules for the trade. Now, this is going to be a long trade buy with the slingshot. The black line in the ribbon must be on the bottom of the ribbon and in the green background or the silver background, and the lead line in the slingshot must cross above the oversold level. Okay, so this is the black line in the green. Long-term direction is bullish. This is in the oversold. It's got to cross out of the oversold to trigger it. And it's got to move up out of the oversold to trigger that. Okay. And so low here 0.5. It's going to have a high of 8.2. And if it closes up, it'll trigger us in at 8.3, probably. Okay. Just waiting. Everything slowed down. We had a pretty good morning this morning. We were plus 18 on gold, minus 3 on the NQ, plus 6 on crude, plus 16 on the ES in the morning session. It's been getting better. This week started out really, really flat. As you know, in here, the first 2 days of the week, Monday and Tuesday, we had 0 trades. It just didn't set anything up. And that could be the case today, but I think this gold is going to close up, so we're going to get something here, I think. I think the gold's going to give us the up close. I'm not real confident that it's going to keep going up. Waiting. So if this drops down below right here, it just closed down. So now this order's got to go down some. Okay, because the low of this bar right now, I actually wanted this to pull back a little bit deeper, but the low now here is 0.3. So it's going to be 8 ticks above 0.3, which is 0.1, is what we'll be buying right now. Okay. Now it'll be 8 ticks above 0.2, should be 0.0, is what we're buying right now. You want to look at Apple? Okay. Hang on a sec. Apple, you had a long entry at 167.83 with a stop loss of 351 or 64.49. The price target 175.02. I don't know about the rest of that, but that's what you had. Okay, so let's go look at it and I'll tell you what we had. Right. So 8.6. This is now going to go all the way down here to 7.6. 8 ticks above that. Right, now 6.7. It's going to go down to 7.5. Let's find something that's not giving us anything right now. The NQ is going to be the least likely for me to trade. And look at Apple. I'm going to slide this. Hang on. Slide this over here. And look at that on the NQ. Now, give me just a second there and I'll fix that up for you. All right, we're not going to end up with a trade here on the gold, okay, because the black line just got into the red. But let's look at Apple really quick. All right, now Apple is $167 a share, so let's look at it on a different size range bar. Look at that one on a 50 range. So every bar is 50 cents, okay? Every bar is 50 cents. Now, because it's Apple, we're going to have to change the We'll change the sensitivity settings on this. Let me do this. Let's put the no trade zone on and see what the no trade zone is saying right now. Okay, it's going to say everything, I think. Yep. Okay, so let's go here. And we'll change this around a little bit to 0.01. We'll try that. Okay, that's just about right. Try 0.02. Okay, that's a little better. All right, so what it said so far was to go long right here at 66.18. Your stop would have been 65.60, something like that. Okay. And your target, your initial target from 65.18, or where was it right here? 66. The up close of this bar, 66.18. The up close of that bar would have been where you would have gone. Your stop would have been a little bit below here. So if it's 50 tick range, you probably would use a 75-cent stop, right? So your stop would have been 75 cents on this. And your target would have been up here. Your initial target would have been up here at 67.42. So you would have had 66.18 up to 67.42. So $1, whatever that is, say $1.20 target with a 75-cent stop in this case. Okay, that was that one. Over here, you would have had to look left to get your initial target. It would have been way over here, would have been your initial target. Okay, at 64.97, we'll say 65. But your entry point would have been right here at 63.60. Your stop again, 75 cents. And so from 63 up to your initial target would have been up there at 65. So you would have had a $2 target for a 75-cent risk in that case. And in this one, your initial target would have just been right here. Okay, so this would have had about break even as far as risk reward goes. Your entry point would have been right here at 65.18. We'll just call it 65.20, and your initial target would have been up here at 65.79, 65.80. So you would have had a 70-cent initial target on that with a 75-cent stop. So that would have been about even risk reward. This would have been about 2 to 1, and this one over here would have been about 3 to 1. Okay, that's Apple. No, I don't think we ended up with the gold trade because it was disqualifying itself. Yeah, it did. So we ended up with no trade there. This is not a trade right here that I would do. But let me type that in there for you, Casey. Oops, let me see if I can spell that right. Oops. Let me do them in order. It would have been looking at those there on the Apple for you. It would have been this first one would have been 1 to 3, I think, right? 75 cent for a 3-point gain. So it'd been 1 to 3, 1 to 1, and I didn't look at these, but could have looked at those two. It would have been the same type of risk reward in there, but this is the one here that we looked at. The last one was right here. So your risk would have been 75 cents, and your initial target would have been up here. Entry would have been at 66.18. Yeah, let me type it all in. initial target at 167.42. There. Okay, over here on the crude oil, we want to see that pull back some, guys. I'm not going to jump in on this way up here. I'm not going to jump in on that. We want to see a pullback. Okay. Let me check other things. All right. Now, because these are range bars that we're looking at here, let me, yeah, hang on. I actually stopped looking at all the other stuff because I was doing that. Because these are range bars that we're looking at here, you can have defined risk like that, Casey. Predefined risk, because every bar is the same size. In here, every bar is 50 ticks. Every bar is 50 cents. Okay, so you can have predefined risk. We have an NQ trade that just triggered in here too, right? I just took that one that just triggered. My stop just got bumped to break even plus a tick. So I'm going to leave it there. It's got a 30 tick target on it up here. Okay. Now I had a 20 tick stop originally. I'm just going to lock in 4 ticks on this and we'll let it go. It should get all the way up here to 81. I'm sorry, I'm looking at the wrong thing. I'm sorry, I was taking an NQ trade based on the ES chart. Oops. Well, let's go to the NQ really quick. NQ and Forex. Okay, I just got taken out with 1 point on the NQ that I did by accident. Futures is what I mean. Let's hope that this chart looks something like it should. Okay, it did not. Okay, so I took that based on the ES chart right here because ES had a long, right? And the NQ actually, as it was running up here to the ribbon, it's given, I wouldn't take this short off the ribbon because we just had a direction change, but it's suggesting that it should go down if we get a down close in here. Hang on, let me jump back over here. That was a little bit of a mistake. That's okay. Okay, so Casey, I don't know if you saw the whole theory behind all that. There is a long trade here on the ES, so that way. Okay, here, this is right now on the ES. Stop there. Now, following the rules, right, we took the long off the ribbon right here with an arrow off the ribbon. That's the highest probability trade. It should get up here to 41.81, right? After 4 ticks in profit, where it is right now, you bump that stop to break even. Okay, bump that stop to break even after 4 ticks in profit. Now, if we go back here to the trade rules, so trade rules with slingshot is what we did. Black line of the ribbon must be on the bottom and in the green or silver. It was in the silver in this case. And the lead black line in the slingshot must cross above the oversold level. So it did all that. So the entry was right. Now the risk management is the next step. We're on a 7 tick range, so we have a 10 tick stop to begin with. It trails to break even after 4 ticks in profit. We had 4 ticks in profit, so my stop's now at break even. Now the trade exit. This is the part we're at right now. Look left to the prior swing high for areas of support and resistance. So that would be right here, 41.81. All right. Then look in the DOM and see if there's anything that corresponds to that. And there is exactly at 41.81, a good number. There's a number before that also. I'm just going to lock in 1 tick on this. There is a number before that also at 41.79.50. So as this starts to move up, there's a chance that it's just going to get up to like right here, and then retrace a little bit and then make the next push up. Okay, so I'm going to trail my stop as it, as I see fit once it starts doing that. Right now, I just wanted to lock in 1 tick, so we pay for the commission, and we're out with the 1 tick paying for the commission. Okay, so that was our first trade this week in this room. 1 ES with 1 tick. Now I did the NQ and I got 4 ticks on the NQ, but that was an accident. I didn't mean to do that, so I'm not going to count that. Did I remember to adjust the sensitivity back from the NQ? I didn't adjust the sensitivity back on the NQ. Thank you, David. I had set it to 0.01 for Apple, and it is at 0.02 for Apple apparently. 0.35 is what the NQ is. Okay, and the NQ is in a no trade zone right there. Thank you for reminding me, David. All right, so on the ES, up here is where it should go. 79.50 was the first spot it should slow down at. All right, I ended up getting one tick on that. Okay. Is this, yes, all of this right here that you're seeing is all TradingView, Casey. You have to take the trial to get access to it. To take the trial, go out to mytradingiq.com. That's how you take the trial. Go to mytradingiq.com, sign up for the free trial there. Okay. It's pretty self-explanatory. We have to get access to all this stuff. This is, the TIQ context is one indicator and the slingshot is another indicator. When you sign up for the trial, you give us your username and you'll get access to this one and this one, that one and that one. Okay. So right now, I didn't mean to do that. I just put a couple more TIQs on there. Take those off. But 79.50 is where I thought it was going to get up to before it started to pull back. Okay. Okay, Mark, in TradingView, what is the shortcut? Scroll, you press Alt and the back arrow. Oops. Sorry. You got to click somewhere else in the chart like that and press Alt and the back arrow. Okay, that is how you scroll back quickly. Now, apparently, I put a couple extra slingshots in here too. Get rid of those. Okay, we get up to 79.50, which was the initial level that I thought it was going to get up to, and 81 was the next level. Now, 81 was looking good for a couple of reasons. It wasn't just because it's the swing high, but that is one of the reasons it was looking good. And 79.50 was the other one that I had said when it was down here. All right. Yeah, so we'll teach you how to read all that stuff. You know, there's a lot you'll get out of taking the trial, even if you don't end up sticking with us. There's a lot of information we give away just for free that you should know as a trader if you take the trial. Just basic stuff that a lot of people don't know and probably should if you're actually going to try and make this a profession. Or if you just want to supplement your income on a regular basis, on a consistent basis. So it's now, this whole time is gone. And I had one trade with one tick today. So far this week, 3 days, one trade, one tick. That's just crazy. But I think the next couple of days we'll have some more volatility. Get back to like the last couple of weeks have been. It's been really slow though, really slow. I mean, to have 4 markets on and really have no trade opportunities, it is what it is. Not much we can do about it.
In my humble opinion, it is a market that is getting ready to make, or markets that are getting ready to make an explosive move in one direction or the other for some reason or the other. Could be an economic report, could be some breaking news that shows up on your local opinion channel. I don't know.
Yes. For those of you guys who are in the live chat that can't hear Dwayne, what he was just saying is in his opinion, and in my opinion as well, the market is coiling up right now. For some reason, it's about to make an explosive move one way or the other. And I don't know which way it's going to be, but either way, it doesn't matter. You know, we just need volatility. We make money both ways. So all we need is a volatility in the market. All right, guys. Well, it is now 1:31. So it looks like we're going to wrap this session up with just one single trade with one single tick. We did end up the morning session with plus 18 on gold, -3 on the NQ, +6 on crude, and +16 on the ES. So we did have some volatility this morning, enough to trade. And we actually had a really small amount of trades this morning. I mean, the smallest we've had in a long time. If you look in here, this is a spreadsheet we fill out at the end of every session when we trade in the morning, and we only had 7 trades this morning. And if you look back, historically, 30, 20, high 20s, the number of trades that we usually get in the room in the morning is so much bigger. But anyway, take the free trial, and you get to look at that spreadsheet too. Right? It goes back 10 years of our daily results. 10 years. You're not going to find that anywhere else. All right. I am going to end the live stream. It is time for me to end the live stream. So, all right, you have a great day too, Rico. I did get your text message. We will set you up. I'll put you on the list right now. I'll put you on the list right now. Okay. And I can cross one name off the list. All right. That is it, guys. I'm going to wrap it up in here. Thank you for coming today. If you have any questions, you can email support@cfrn.net, support@mytradingiq.com, either one of those, and we'll get back to you. You can take the free trial at mytradingiq.com. It's right there on the home page, mytradingiq.com. You will be able to have access to the indicators through MyTrade. These are TradingView indicators right here. This is TradingView. These are TradingView indicators. To get access to the indicators, you have to go through the free trial. Okay. So again, go to mytradingiq.com and we'll get everything all set up for you. If you give us a username, we'll get you set up right away. All right, get you set up this afternoon. All right, that is it. Ending the live stream right now, and we'll pass it back out to fabulous Phoenix, Arizona. Studio A overlooking South Mountain, America's largest city park. Dwayne, out to you.
All right, and again, the recap of the morning session. I know it was quiet.
Yeah, well, the first 3 minutes, one trade, $720.
Good job.
Thank you.
Most excellent. Okay. All right, guys. As promised, we will. Okay, nothing's really changed here on this daily chart. We're still up against resistance. I mean, price is literally pinched between step line and blue and sideways. Now we've had resistance at the CFMA1. That's the official name. I call it red and falling, blue and climbing for obvious reasons. But when blue and climbing gets directly above price, it most often becomes resistance. When red and falling turns to blue and climbing, then it almost always becomes, first, red and falling gets below price, becomes support, leads it to turn to blue and climbing. This is really important for spotting potential changes in the overall trend. So I keep thinking each day I'm going to see this turn to red and falling. I mean, it just seems logical that we're due for a pullback here to the BVC. Then here's the 24% fib, 38, the 50, and the 62. Those fibs are based on the low of the downtrend we've been in for more than a year. That low was put in October 13th. The bounce off of that low was put in on the high was put in on February 2nd. And here we are. Just grinding sideways, waiting for that thing, whatever it is, to put the markets in motion. I mean, ultimately, we're either going to that February 2nd high or we're coming back to the 24% fib retracement. One of the two. But in the middle, we got the top of this trend line and we got the daily BVC. When price hits the BVC, whether it's on a daily chart, a 30-minute chart, pullback holds more often than not. So as we come back, could get a bounce, we could get a reversal, okay? So we'll be monitoring that closely. Stay tuned in. Walk you through it each and every day. Okay, now we're on the 30-minute chart. All alerts, both the logic and the concierge trade alerts, are based on the 30-minute chart. The vertical line you see on the screen separates today, Wednesday, Tuesday. Back over here is Monday. The weekly zones are published Monday morning at 6:15 a.m. Eastern for our members and free trial members. We've published the zones every week since December 14th of 2009. And as I said earlier, once you understand how price behaves around the zones, they will become one of the most important tools in your trading toolbox. Now, our members, as I showed you earlier, had these target numbers last night at 6:40 p.m. Eastern. Remember, if price gets above the BBC on the 30-minute, it's trying to get to the long target. If it's below the 30-minute BBC, it's attempting to reach the short target. So I told you to make note of where price is on your 30-minute chart at the time the report is released. Also, draw a line in the sand at the long target. Draw a line in the sand at the short target. Now, this is what my lines in the sand look like. You can make yours look any way you want. So last night at 6:40, all of our members and free trial members knew that price was below the BBC. So we're automatically anticipating lower prices. Once blue and climbing turned to red and falling, all you had to do was get short. And it took you right down to the target at 41.64. From 72 to 64, it's 8 points, $50 a point, $400 per contract traded. If you've earned the right to trade 10 contracts, that's $4 grand. But you must first earn the right to even trade real money. The 24/20 blueprint walks you through that process, gets you prepared. Once you go live with one contract, your goal is to increase your account balance by $2 grand. Once you do that, the blueprint gives you the green light to add a second contract. Big difference between number 1 and number 2. First contract is funded with your startup capital, but number 2 is funded with profit you earned in the market. Same with number 3, number 4, number 5, all the way up to 20. It's called the 24/20 blueprint because it was designed to help you to go from 1 to 20 contracts over a period of 24 months. Now, you should never feel compelled to trade more than you're comfortable with. Once you earn the right to trade 5 contracts, just 2 points out of the S&P each day, that's $500. It's not going to put you, in a Bentley, but it's a pretty decent living. At 10 contracts, that puts you just 2 points in the S&P, or 10 ticks in crude, or 10 ticks in gold. That puts you in the top 3% of wage earners worldwide. But you've got to be willing to do the work to get there. Just because you have enough money to trade 5 contracts, or 10 contracts, or 20 contracts, we all know the saying, a fool and his money are soon parted. I'm not calling anybody a fool. I'm just begging you not to be foolish. Okay? All right. So we came down, we hit the target. Boom. Now, price stopped there. Didn't quite make it to the target below. The zone below is 45.46. But we can clearly see that back on Monday, the market found resistance here. And if I scrolled back, I could show you the reason it found support there. But once support is defined, it will remain support until proven otherwise. This is a really important lesson here. I hope you guys are getting it. Now, we're above the BBC. We got the step line, we got price, the step line, blue and climbing. My concern is as we approach these highs from yesterday, the step line is going to cross blue and climbing, and that's going to result in price pulling back to the BBC. BBC just stands for bull bear cross. When price crosses below the green line, we anticipate lower prices. When it crosses above the green line, we anticipate higher prices. When price rallies up to a zone, we expect resistance. When price drops to a zone, we expect support. Price is always trying to get to a weekly zone. From the moment the markets open Sunday night at 6 p.m. Eastern until they close Friday afternoon at 5 p.m. Eastern, if price on the 30-minute chart is above the BBC, it's trying to get to the zone overhead. If it's below the BBC, it's trying to get to the zone below. Does it always make it? No, because it runs into predefined support in this case. Now, what happened here? Bearish cross. When you have a bearish cross that leads to an extended move, and this isn't much of an extended move, but the same principle. As price attempted to run higher, it got stopped right at the area of the bearish cross. Same is true of a bullish cross. Just so happens this bullish cross was at a weekly zone, so as price came down, it was support times 2, the zone and the previous bullish cross. Over and over, again and again. Now, if price can get above these highs, okay, let's talk about 41.86. $41.86 up to $41.90. Okay, that's 4 points, $50 a point, $200 per contract traded. Well, why not just trade it here? Well, because we have predefined resistance here. So we've got to get above that area before we consider going long. Well, then why not go long as soon as we take that out by 2 ticks? Because the market has not confirmed. It hasn't proven anything. We need to see it move more than a couple ticks. I want to see it move a couple points. Okay, that's why I put the entry up here. But again, from 86 to 89, or I'm sorry, 90, that's 4 points. If your goal is 2 points a day, well, that's 2 days' work right there. But you got to be patient, because before price does that, it may pull back to the BBC. Now, the pull back to the BBC holds more often than not. Look over here. Pullback held, and it held, and it held, and it held. And then it held. And we got below the BBC, found support, the pullback held. And it held, and it held, and it held, and it held. We know eventually price will trade through the BBC. That's what keeps the markets fluid and tradable. Okay? So the pullback holds more often than not, but eventually it will trade through. So see how it traded through here, gave us a leg, and what did it do? It retraced to the BBC. Price always reverts to the mean. In our case, the mean is green, and we just gave it the name BBC. Bull, bear, cross. Bullish above it, bearish below it. Tried to make everything as simple as possible. And for traders who've been struggling to learn how to trade and be consistently profitable in many cases for many years, they bring with them a lot of baggage. Okay, and so the first thing we got to do is take you and your baggage out back. empty that baggage out onto the ground and set fire to it. Burn it. Okay? It didn't work before. If you choose to go back to it later, yeah, you'll be able to do it again. All right? But I want you to have a clean slate. I want your mind to be a clean slate so that I can teach you something that I know works. If you start mixing and matching and bringing in other things, and well, I'm going to use this to confirm that, now you've totally destroyed rules-based trading. Okay? You're either all in or you're not in at all. All right. On the Dow. Here's where the market opened. Its price was below the BBC. All of our members and free trial members knew that the downside target was 33,945. So we hit support, pull back held, caught another leg, pull back held, right to the target. Now red and falling has turned to blue and climbing. We ran up to the zone, and what do we find? Resistance. We made another run and we put in a lower high. So this may be one of those candles where the pullback doesn't hold. I don't have crystal balls, so I cannot tell you that with certainty. But once price is below the BBC, I would be looking for shorting opportunities down to here, down to here, down to here, and even down to here, if the market permits. So the S&P hit the target, the Dow hit the target, Russell hit the target. Here's the open last night. Down we go to the target. Now we've gotten above the BBC. And right now we've run into resistance that was defined early in the session last night. So you want to let price get well above that. $18.10 to $18.13, that's 3 points. Okay. But again, price is trying to overcome this resistance. It hasn't done it yet. Don't pull the trigger yet. Wait for price to prove itself. On the NQ, target hit. Market opened. Everybody got the numbers. We're below the BBC. Once blue and climbing, turned to red and falling. All you had to do was go short, and it took you right to the target. Okay, it traded through the target. From back up here, around 13,160, we'll go 13,167. 37. That's 30 points at $20 a point. You can do the math. That's per contract traded. Okay. Now we're above the BBC. We have blue and climbing. Bearish cross. Resistance. Okay. Resistance kicked in a little bit early. If it makes another attempt higher, watch this area like a hawk. Okay. 13,217. 13,218. Okay. That needs to be broken. And once broken, that would give you a window of opportunity here. Okay. Remember, we can teach you, we can give you knowledge, we can provide the tools to do the job. The patience and the self-discipline, that's got to come from deep within you. When price runs up to a zone, we expect resistance. When it drops to a zone, we expect support. Look at how many hours price consolidated. These zones were published Monday morning at 6:15 a.m. Eastern. And here it is, Wednesday afternoon. Price dropped to this zone. What do we get? Consolidation. Remember, only three things can happen. Consolidation 70% of the time, rejection 20% of the time, 10% of the time, the slice. And when price slices through a weekly zone on the 30-minute chart like it's not even there, what happens most of the time, not all the time, but most of the time, is when that move runs out of steam, price will retrace to the zone it sliced through and then continue in the direction of the slice. Step line, if we close below the step line, and the step line is going to cross blue and climbing, and that may end up being the high of the session right there. However, if buyers are committed and we can take out this high and then take out this previous bearish cross, then there will be a nice rally into the close and some good opportunity. From 235 up to 265, that's another 30 points, $20 a point. You can do the math. Okay. All right. Crude. We are now in the month of June on crude. Market open, consolidated. Members and trial members got their targets, and bang, right to the target. Through the target, down to the zone. This is actually the lowest weekly zone this week for crude. When crude moves $1, let's say from 80.50, I mean right here, everything's telling you to be short. You're below the BBC, you got red and falling, and then you got the step line below that. So from 80.50 to 79.50, that's $1,000 per contract traded. This move here is well over $1,000 per contract traded. Now, I'm always conservative, so why'd I put the target here? Because of that. Just because price gets to the target doesn't mean you have to jump out. Let the chart tell you what to do. But if you did trade it properly and got out at the target, you deserve to have that smile on your face. Gold. Market opens, down we go, right at the target. Okay. Now we're back above the target, above the BBC. Blue and climbing is directly above price. Price has to overcome. And then you've got a window of opportunity up to 2016. Then you got a window from 2022 to 2024. And if we get above 24, then 26 to 28. Okay. Every market I've shown you, every CTA, we hit the target without any confusion. I mean, it was what a beautiful session in that regard. Okay. It's not always as clean and pretty, but well, here's the deal. See, if you're new, you could look at this and go, wow, the dude had a lucky day. Well, I encourage you, go to youtube.com/CFRN, scroll back 6 weeks, 6 months, a year, 2 years, even more. You can start to ask yourself, wait a minute, how many lucky days can one guy have? Okay, this has nothing to do with luck. It has to do with hard work, learning a strategy that has a definable edge, and using it. Mark Douglas in Trading in the Zone said trading perfection is knowing what to do, when to do it, and just doing it. You don't jump the gun, you don't hesitate. When the trade arrives, you take it. It's like when the train pulls into the station. If you hesitate, you'll be left behind. And if you jump out in the middle of the track before the train gets there, yeah, well, That's gruesome, so we won't talk about that. Silver, we not only hit the short target and made it down to the lowest zone, we got above the BBC, got above this zone, and we ran to the long target. So we hit the short target, we hit the long target. Two-sided action. That happens sometimes. And the euro, here's where we opened. We get below the BBC, we've got red and falling. We come down to the zone, support. We bounce up to the BBC, which we expect to be resistance, and it was. And it gave us a beautiful leg down to the target. Now we're on the other side of the BBC, just below this weekly zone. So there's a little area you could play with here, but I would prefer to see price get from 250 to 330. That's your goal for the day. And if buyers stay committed, then you could trade it all the way up to the zone overhead where you expect resistance and consolidation. That brings us all the way around the world back to the daily chart. Okay. I gotta say, buyers are pretty committed. There's green in this daily candle. So how we close today will be important. If we rally into the close, I'll probably take this away tomorrow. If we fail to rally into the close, if let's say we were to end up closing the session at the low of the session, I would become probably more convinced that this is a potential head fake. But the reason we look at a daily chart before anything else, before we sit down and start looking for trade opportunities on the smaller 30-minute time frame, we want to look at what the institutions are looking at, because their accounts are denominated in hundreds of millions and billions of dollars. They're watching daily, weekly, and monthly charts the way you and I watch 30-minute charts, 5-minute charts, tick charts, and range charts. Our accounts tend to be denominated in thousands and tens of thousands of dollars. It's the institutional money that moves price. So we had a drop, keeping in line with the potential for this to be a major head fake. But it looks like things are changing. Now, you don't have to look at the daily chart every 5 minutes, but you do want to know what the institutional traders are doing. Not just on the S&P, crude, gold, euro, Walmart, Amazon, Bitcoin, British pound. To become a lifetime member, with no recurring fees, no upsells, no nonsense, ever, go here, eminifuturestrading.com. 2 mouse clicks, you're a passport holder. That is your all-access pass to everything we do, everything we've ever done, and whatever we do in the future. Once you become a passport holder, you won't spend another dime with us. You'll have access to the live training room, 2 hours every trading day, around-the-clock support via Telegram, unlimited one-on-one private mentoring. The strategy and the methodology that we teach you is fluid across all markets and all time frames. So are the indicators. As a passport holder, you'll receive the Logic 247 alerts around the clock. You'll receive the Concierge Trade Alert report every evening when it's published. And of course, you'll have access to the members only workshop every Thursday night, which, by the way, is tomorrow night at 8 p.m. Eastern. Every trader is going to end up either here or here. Passport doesn't guarantee you're going to end up here, but at least you'll have a fighting chance. 9 out of 10 new traders don't even have a teacher. They don't have a mentor. They don't have around-the-clock support. They don't have unlimited one-on-one private mentoring. No matter what career path a person chooses, they have to have someone to teach them how to do the job. From plumber to electrician, to rocket scientist, to brain surgeon. Think about it. And ask yourself this question. Do you have a teacher? Do you have a mentor? Do you have a business plan? Do you have a trading plan? Are you part of a vibrant trading community? Unless you can answer yes to every one of those questions, the odds are not in your favor that you'll succeed. And we want you to succeed. In fact, we want you to succeed so much that we give you 5 days of our time and our resources so that you can make a well-informed decision whether or not trading is right for you and if our style of trading is right for you before you spend a dime. And then once you become a passport holder, it's a credit card away because you don't need anything else. Everything a trader needs, all under one roof, one low price. Let's wrap it up with our good word for the day. We started a topic yesterday. You must care for the needy. I bragged on my wife and her food ministry. So this is part 2 of the discussion. I'm done bragging on her though. Well, at least for now. Jeremiah 22:16. He defended the cause of the poor and needy, and so all went well. When he was a theology student, Jim Wallace and some of his classmates took scissors to the Bible and cut out every verse about poverty, wealth, justice, or oppression. And would you believe it? By the time they had finished, there were some 2,000 verses lying on the floor. The fact is, when you cut concern for the poor from your Bible, you cut the heart right out of it. Here's one such verse. He defended the cause of the poor and needy, and so all went well. Is that not what it means to know me, declares the Lord? Jeremiah 22:16. Jesus often quoted scripture, but only on one occasion do we find him selecting and reading from it. And what portion did he choose to read publicly? Well, it's in Luke 4:18. He's standing in the temple. The Spirit of the Lord is on me, because he has anointed me to proclaim good news to the poor. He has sent me to proclaim freedom for the prisoners and recovery of sight for the blind, and to set the oppressed free. Jesus' to-do list is help for body and soul, strength for the physical and spiritual, and therapy for temporal and eternal. Now, some people, albeit a minority, are poor because they're lazy and need to be taught what God's word says about that. 2 Thessalonians 3:10, those unwilling to work will not get to eat. But others are poor because parasites have weakened their bodies, or they spend 6 hours every day collecting water, or rebel armies have destroyed their farms, or disease has claimed their parents. These are the people God has assigned us to care for. That's our good word for the day. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.